Have you ever wondered what happens when the price of something just completely disconnects from reality? We're going to dive into a question that has puzzled people for centuries, and let's be honest, cost investors a fortune. What causes these massive economic bubbles?
So, let's start with a little thought experiment. How much would you pay for one tulip? You know, a couple of bucks, maybe. Go ahead, get a number in your head.
All right, next question. What about a house? Okay, obviously a much bigger deal, a huge purchase. And for our last one, how much for a piece of a website that just sells pet supplies online? So we've got a flower, a house, and an online store. What in the world could these three things possibly have in common? Well, the wild answer is that at different points in time, all three of these things were at the very center of a massive speculative frenzy. People were paying way more for them than they were actually worth, their intrinsic value. In every case, prices shot up to insane levels, and then, inevitably, they came crashing down.
This whole phenomenon has a name. It's called an economic bubble. It's this cycle of prices escalating like crazy, totally unhinged from an asset's real value, and it always ends with a sudden and pretty dramatic pop. So the real mystery is, how do these things even start? To really wrap our heads around this, we're going to jump in a time machine and go back to one of the most famous, and frankly, one of the most bizarre bubbles in all of history, the story of tulip mania. This was a time when a single flower basically bewitched an entire nation.
So picture this. It's the 1600s in the Netherlands, right in the middle of the Dutch Golden Age. Amsterdam is the center of the universe for global trade. Money is pouring in, merchants are getting seriously rich, and everyone has this incredible appetite for luxury. You can see how this was pretty much the perfect storm, just waiting for something to ignite it.
So, why a tulip? Of all things. Well, it wasn't just any old flower. For starters, it was an exotic import from the East, which made it an instant status symbol. Plus, they were really hard to grow. But here's the real kicker. A specific virus would sometimes infect the bulbs, and it created these stunning, flame-like patterns on the petals. This weird fluke of nature made those particular tulips incredibly rare, and people went absolutely crazy for them.
Okay, so we've got a desirable flower. But how does that simple desire morph into a full-blown economic frenzy? Let's break down the anatomy of how this bubble got so big.
The secret ingredient, really, is mania. This is the psychological driver of the whole thing. It's not just that prices are going up, it's that people become willing to pay absolutely absurd amounts of money, completely ignoring what the thing is actually worth. It's like they're not even buying the asset anymore. They're buying into the excitement itself.
And hey, don't for a second think this kind of mania was a one-time thing. Just think about the dot-com bubble back in the 90s. Back then, it wasn't flowers, it was new, exciting websites that were the tulips of their day. They represented the future, innovation, and just like with tulips, everybody wanted a piece of the action.
And that's how you get this really powerful feedback loop of hype. It starts off simple enough. Prices start to rise. Then you hear stories. Stories about your neighbor, some merchant making a fortune overnight. That builds hype. That hype pulls in even more people who are terrified of missing out. Classic FOMO. All this new demand just sends prices into the stratosphere. And at that point, the price has absolutely nothing to do with the value of a flower bulb.
So just how high are we talking? Well, get this. At the absolute peak of the mania, one single rare tulip bulb could sell for more than 10 times the annual salary of a skilled craftsman. Just try to imagine that. Paying 10 years of your hard-earned wages for one flower bulb? It's truly mind-boggling.
Yeah, a situation like that is just not sustainable. It can't last. Because what goes up fueled by nothing but pure hype, well, it has to come down eventually. And that brings us to the inevitable and very dramatic conclusion of our story.
Sooner or later, something has to give. Maybe a few big players decide to sell and take their profits. Or maybe just a little seed of doubt starts to creep in. All it takes is a tiny crack in that collective confidence, and this realization just ripples through the market. Wait a minute, the price we're paying is completely insane. People start looking around at each other, probably thinking, have we all lost our minds?
And just like that, pop, the bubble bursts.
The aftermath was immediate and frankly brutal. Demand just evaporated. Prices didn't just fall, they completely cratered, hitting staggering lows. The whole market crashed, and countless people who had poured their life savings into these flower bulbs, they were wiped out, financially ruined, almost overnight.
Now you might be thinking, okay, that's a wild story from 400 years ago, but why does it matter to me today? Well, it matters because this isn't just some quirky thing that happened once. It's a pattern we see over and over again.
It's the same pattern, just with different assets. In the 1630s, it was tulips. Fast forward to the 1990s, and it was dot-com stocks. Then in the 2000s, it was real estate. In each case, a new, exciting asset captures the public's imagination, and the whole cycle starts again. The details change, but that underlying human psychology, the hype, the mania, the fear of missing out, that stays exactly the same.
And as economist Pratik Singh points out, this isn't some rare event. It's just a fundamental part of how market economies work. They go through these cycles of boom and bust. It's basically a built-in feature of our economic landscape.
So what's the big takeaway here? The story of tulip mania is this incredible lesson in human psychology. It's a timeless reminder that that line between what we think something is worth and what it actually costs can get dangerously blurry. And that leaves us with one last big question. Since history tells us there's always a next time, what do you think the next big bubble will be?